Hello, everybody. It is June 19th, right? June 19th?
Yes.
2021. I want to do a video with my thoughts and Denise's thoughts, and maybe your thoughts if you want to write in the comments about what's going on with the economy. Because, we're in record highs for all kinds of assets right now. When I say assets, I mean the stock market, cryptocurrency, and even if we're off the highs, we're still very close to the highs. We're talking about housing, raw materials, gold, silver, anything, steel, aluminum, you name it. Food, groceries, everything's gone up. So what we want to know is, are we in a period of hyperinflation, or just inflation, hyperinflation? And is this caused either in whole or in part by very low interest rates that we have right now, in combination with or separated from the Fed printing money? Because if you look at all the sources, most of the sources say that the Fed, meaning this arm of the US government, has actually printed probably in the last year and a half, because it's June of 2021, between 30 to 40% of all the money that's ever been printed has happened there. And of course, you guys know that a lot of it has gone out to programs. I know even us, we've run businesses, we've been affected, and we're eligible for some money, which we haven't received yet, actually. But that's how the government is. I guess that's why. And the reason why, of course, if you think about it, is because of the pandemic and the way the government chose to handle it, which is shut down the economy. And in order to shut down the economy, or when you shut down the economy, everybody takes a hit. So how are they making up for it? They're making up for it by injecting new money into the economy. The question is this having, and will it have, massive negative effects going forward? Because two things could happen: hyperinflation, inflation, like we're going to talk about here, and also they could be forced, because of inflation, to suddenly raise the interest rates, which probably would tank the prices of all the assets. Because I know I can comment on real estate too, I'm a licensed realtor, but Denise, I want to ask Denise first, because Denise is a professional shopper of probably fashion, clothes, stuff like that. Have you noticed the prices going up recently? Prices of stuff?
Not on clothes.
Not on clothes. Not at all.
Some restaurants have raised their prices, but that costs them too, because then they have to reprint menus if they have paper menus.
That's true, yeah.
The electronic prices have gone up. If their menu's online, I've noticed that it's more expensive.
For sure, I think up right away.
Not right away. It took a few months. Between this year and last year, I've noticed a difference. I don't. But
you like, for instance, you went through a refinancing. Like, a lot of people have. Why? Because the interest rates have come down so low.
Yeah, I got a 2.875, but I know that back in the 80s, home interest rates went all the way up to like 18%. I know some people had some that were comparable to their credit cards, but we bounced back from that hyperinflation, so I think we will bounce back from this one too. And I don't think the rates will go as high as they did back in the 80s.
Okay. Well, also, in terms of inflation, is this only the beginning? That's the question. Because I'm seeing, like in the real estate market, as a licensed realtor, that home prices are just leaping up. And it's not just the prices, it's the terms. It's like, if you really want to buy a house in most markets, you usually won't be able to do it. There's way too many buyers. Almost every sale is an auction, literally an auction. That's how you have to look at it, right?
Yeah, like the number of buyers has caused competition in the lower priced housing market.
Well, even the higher ones too. There's an incredible shortage of houses. Some people are saying that the shortage is so severe it will take years. So even if price appreciation slows down, because it's been, I'd say in many markets, like 20% year over year for like the last year and a half, as we've been going through this process, once it started picking up. And that's not sustainable. But the thing is, what they're saying is that if the interest rates are so low and they stay low, then it is sustainable. That's what many people are saying. Of course, no, we can't predict the future. I cannot predict the future with any kind of consistent accuracy. I don't think anybody can, truly. But right now, I know that the rates are record lows, or near record lows. And asset prices are at record highs and near record highs. So what's going to happen? Well, if those rates have to go up and they would go up, I think the lawmakers probably are fighting behind closed doors, wondering what to do. And they're thinking that if we raise the interest rates, it is going to tank many sectors of the economy. Because if the interest rates, let's say you just got under 3%. Well, if you had to pay 5 or 6% for that money, you think you're willing to pay the same price for that house anymore? Or can you even do it? You won't be able to do it. That's the problem.
Okay, my first house, my interest rate was 5 1/4, and I did it.
But the price was also significantly lower at that time. That's the thing. The pricing's lower.
In the 90s, yeah, but I bought a cheap house. I started looking at houses.
But there aren't any anymore.
40,000. Well, I bought a fixer-upper. There are always fixer-uppers.
Right.
You just have to change your expectations. You have to lower your expectations.
Okay. So anyway, that's what's going on. We're not sure how it's going to pan out. Let me know your comments below. Because I also, if you remember, if you think back like 2 years ago, before all this happened with COVID-19 and the pandemic and government shutting everything down, which is what's caused all this, they, we're wondering, well, first of all, is the Fed's going to stop printing all the money? That's a whole separate topic for a video. But before this, like I was saying, we were thinking we might go into negative interest rates. Seriously, at least from the mortgage side, from the housing side, we've seen this in other countries in Europe. So I'm wondering about the pressure to raise interest rates. I don't necessarily think the government really wants to or will raise interest rates. They might just let this ride out as inflation, and not raise interest rates. And if that happens, the housing market is not going to collapse at all. And the prices of all these things that keep going up, like even gasoline's going up, they're not going to come down. At least not anything significantly. So I look forward to reading your comments and hearing your thoughts. And who knows what's going to happen. But I also want to let me know if you think the Fed's going to start printing money. Because that's the problem, is that one other aspect of this is that cryptocurrency prices have soared. And people are saying, some people are saying it is or it is not being used as a hedge against inflation because the U.S. government is devaluating currency. Let us know what you think about that too, because I think that is happening. I think people are using it as a hedge. Especially a lot of people, I think, also have taken the money that the government has given them recently and bought cryptocurrency with it because they see what's going on. And if this keeps going on, I don't know, maybe the Fed will taper off the printing and leave the interest rates alone and just let a little period of inflation go up until demand comes back down, which eventually it will. Who knows? We'll see. We'll report back. Bye.